Hello, my name is Barbara Armstrong, and we're doing a short series of videos on candlestick patterns. Today, we're talking about the bullish gap, which is number 16 in our series. I invite you to follow me on X, my handle at Barbara Armstrong CS. You can also find me on LinkedIn. So before we get into discussing our bullish gaps, I just want to remind you that when we look at this particular chart pattern. This is just for informational purposes only, not to be construed as a recommendation or endorsement of any particular stock or security, chart pattern, or investment strategy. The examples we'll look at today are on the paperMoney software application on the thinkorswim desktop platform. So we want to be aware of that as well. So this is what our bullish gap looks like. And what makes this a bullish gap? Well, it is a bullish pattern, I guess you can tell from the name. And it's created that when we have a candle that is created when the stock opens higher than the previous day's high of the day, and even when you can take into consideration the low of that day, it is still higher. So the low of this day is still higher than the high of the preceding day. So this is what creates our gap. And sometimes gaps can be large, and sometimes gaps, are not so large. But that gap is created when the low of the next day is higher than the high of the preceding day. And so, that's a pretty simple concept. And when we look at the chart, sometimes, these gaps can be very obvious on the charts. And, so we look at, well, what creates a gap? Well, that might occur after an earnings announcement. We might see a gap either up or down. Or we might see breaking news. The FDA has approved the use of a drug that's been in trial. There might be the end of some, big lawsuit, so any number of different news events, a new product that's come to market. But it really kind of clearly demonstrates that market sentiment, at least on this particular day, is one-sided. The bulls are large and in charge. And had this candle looked like this candle, where we saw a large white candle after the gap, we call that a running gap, because it's not only opened higher, but then it's continued to run to the upside. And gaps can also indicate support levels. So some traders might look at a gap and say, okay, now where would I consider there to be a support level? And so some might say, well, I consider this to be a support level right here, the low of the day. I consider this to be a support level, the high of the day from which it gapped. And then if it broke down below this, high of where it gapped from, that might be considered to be a failed gap. So the bullish sentiment created by the gap has now been negated. All right, so let's go and look at some examples on a couple of charts. And so the first one I'm going to bring up is Airbnb. So Airbnb, and this was an earnings related gap. So, on August 6th, this closed with a high of 153.79, which I've drawn here. And then the next day, it actually opened at 164.70, so a big move to the upside. And this we call a running gap, because even though it pulled down just a smidge to a low of 163.45, that still represented a $10 move over the close of the previous day, or close to it. And then it's continued to run to the upside. So when you have a running gap on high volume like we had here, this is considered very bullish. And if we're looking for support levels, this is how some traders might look at support. They might say, well, halfway through this candle, I'm going to consider that to be support level 1. And if it gets all the way to the bottom of that candle where it gapped from to the low of that day, support level 2. And then if it comes down to where it gapped from, support level 3. If it were to go below that, that would be considered to be a failed gap. But this gapped up and has kept on running. And in fact, today may have been another gap. Not a huge gap, but still, I mean, it moved to the upside and um, created a new high for this stock. Let's look at another example. So Microsoft is another candidate, and Mastercard as well. So when we look at Mastercard, we've seen a series of gaps. So we had a gap that occurred here back in the middle of July, and then we had an occurrence where this stock gapped up between the 24th, so the Friday and the Monday, it gapped to the upside, and then it gapped again. So this is considered to be, very bullish. And now between the close of business Friday and Monday, this gapped again. And even though we don't see there's not a big gap in price from the close of Friday to the high of Friday's close to the low of Monday's close, this stock is still up over 3% and hit a new high today. And so you call this a running gap as well. And again, if you wanted to put in support levels, one might consider kind of halfway through this candle, support level 1, support level 2, support level 3. So there are 2 examples. If you wanted to look at a third, you could look at Microsoft, and we saw these gaps again. One gap here where you could consider this to be a support level, and this one turned out we didn't have to worry about support because it continued to move to the upside. And and then it gapped again. And so if someone were looking at this stock now, they might say, well, it gapped up. I looked at this as a support level. It's kind of come down in the neighborhood of this level of support, which is a range, actually. And looks like it's moving to the upside again. So if I were interested in adding, stock to my portfolio, I might consider this an entry point. So that's just a way that we can use gaps as a means of determining potential entries for stock positions. So I hope you have found this helpful. Thank you so much for joining me today, and stay tuned. Lots more short videos coming your way.